Vice President Mike Pence and China's leader Xi Jinping exchanging jabs over the weekend, with Pence warning that the United States could double its tariffs on Beijing unless it bows to demands to stop intellectual property theft against U.S. companies and slash a $375 billion trade gap. Pence, speaking at the Asia-Pacific Economic Cooperation Summit in Papua New Guinea, also calling out China's what they call its debt lending trap. It's a predatory lending scheme that has hurt severely many nations. This is President Trump is scheduled to meet with Xi at the G20 meeting later in Argentina this month. Here now to discuss it all, Forbes media chairman Steve Forbes, JPMorgan Chase chief economist Anthony Chan, and American Enterprise Institute resident scholar Derek Scissors. Let me start with the gentleman in studio. First, you, Steve. What I love about Vice President Pence keeps talking about and focusing on, as we're being criticized, or the Trump administration is being criticized for moving America away from leadership in the world, Pence keeps going to bat for these nations that have succumbed to China's lending. This debt lending trap is really working. It's severe. They've taken over a port in Sri Lanka. Just over the weekend, Tonga submitted, okay, we can't pay $160 million. Give us a 5-year grace period and we'll sign on to your Belt and Road program. The president of Malaysia called it modern day colonization. And no other Western nation has taken them on for this. This is what I don't get. I mean, we are showing the type of leadership. Maybe it's not what the establishment wants to hear, but I think it's effective.
Well, what China's doing in recent years is almost a caricature of imperialism from the history books, the way the Marxists would write it. In Africa, they did not use local labor where they could avoid it. They brought in Chinese labor and isolated themselves. In these nations, you mentioned Sri Lanka, Pakistan, the same thing, choking under this kind of debt. This is not winning them real friends and influence. That's why they want the United States active in that region. The Vietnamese will say it quietly behind the scenes. Others are more public about it, but they want to counterweight to China. And on the whole trade front, it's not the deficit per se. It's the real abuses, stealing our property, forced mergers, and things like that that people object to. And China, I think this is a preparation. I'll make a prediction.
Okay.
This is a preparation in 6 or 8 months for a big deal with China involving natural gas, hundreds of billions of dollars. China will agree to buy natural gas from the U.S. over several years. So I think what we see here is skirmishing for the big sit-down.
Well, that would be a symbiotic relationship. We're building up our ability to export liquid natural gas, Anthony, and they need it badly. But, I keep hearing about that they have to save face. And so some are really worried that when Vice President Pence and President Trump use harsh language and call out China, that does more harm than good.
Well, I think it's very clear that both parties certainly have an incentive to make a deal. When you look at the equity markets, our U.S. equity market is down from October by almost 8%. We're now down as we speak significantly. The S&P 500 is up 0.6% on a year-to-date basis, and yet the Shanghai Equity Market Index is down over 18% on a year-to-date basis. So clearly that, to me, is a framework for a deal. In the U.S., we have a lot of positive fiscal stimulus this year. Of course, we have the tariffs. As you go into next year, if we go into all the tariffs that have been promised on a net-net basis, that will end up subtracting from economic growth, even after you adjust for the positive fiscal stimulus. So what I see here is actually a positive environment for both countries to make a deal. So I'm going to go with what Steve says and assume that over the next 6 to 9 months or 6 months, we certainly will have the makings of a potential deal, or at least a ceasefire on the tensions.
And to that point, Derek, a lot of people are hoping that maybe at the very least we get something akin to a framework or an agreement to meet again, something positive, an upbeat note that suggests the ball is moving forward. What do you think?
Well, I think in the short term we'll get that. I think at the G20, neither side really wants to raise U.S. tariffs from 10% to 25% on the last $200 billion tranche as currently scheduled. The Chinese actually want to import more soybeans and gas from the U.S. They're being hurt by their own tariffs. So in the short term, I do think the G20 will be positive. I think it will set up the framework for more discussion. However, I disagree with my two esteemed colleagues on the long term, because neither of them mentioned the 2020 election. And in the 2020 election, the president's going to be held to his promises about China that he made in the 2016 campaign, promises which have not been kept. you can see the evidence of this where the Democrats are not criticizing the president for being too hard on China. They're criticizing the president for being too soft. So I think in the short term, we get a deal, and it unravels as the presidential election campaign picks up.
A deal and then it unravels? Oh, that's a pretty interesting script right there. But what would the deal look like real quick, Derek, then this deal that we would get?
We would suspend the tariff escalation that's scheduled January 1st. We're supposed to go from 10% on $200 billion to 25%. That's the schedule right now. We would suspend that. The Chinese would suspend their elevated tariffs and their effective embargo of U.S. energy and soybeans. So we get a pickup in trade, U.S. exports to China. We would not get a drop in Chinese exports to the U.S. And as was mentioned, we get a promise to discuss further some sort of ongoing negotiations within a framework as we have with Europe and Japan.
Right.
None of that gets to the fundamental problems in the U.S.-China relationship, which then pop up in 2019 late or in 2020.
Although in this most recent speech, Steve, President Xi said, listen, we'll adhere to foreign laws on intellectual property. We do want to open up our economy. I mean, we do know they want to be a consumer-driven economy anyway. That's been a goal of theirs for a long time. It's a dangerous route for them to go with respect to weakening yuan anymore, considering they would like at some point for it to be A, reserve currency, and B, they like to stop capital flight. So they're in a pretty dicey position as well.
The Chinese are, but that's why I think what you're going to see is both sides need a deal. We need a deal for going into 2020, and there's nothing the Democrats can do to stop a deal with China. And if Trump comes up with a big deal, hundreds of billions of dollars involving energy, oil, and natural gas and other things. And one of the things to look for, Charles, in terms of these intellectual property, is China, in effect, creating free trade zones, again, within China, where if you put your facility there, you don't have to take a local partner, you don't have to do these other things. That would be a face-saving way of getting around to not admitting what they were doing.
And very quickly, Charles, when you say face-saving, the Chinese have already lowered tariffs for non-U.S. trading partners, and they've lowered the requirements for the joint venture arrangement. So to basically transfer that to the U.S., there's no face loss there. They're basically doing what they've done to other non-U.S. trading partners, and yet we can all call it a win.
All right. Well, I think everything's in position for us to get a win or something akin to a win, so we'll see what happens. Everyone's on pins and needles. To all the esteemed panelists, Steve, Anthony, Derek, thank you all very much. Appreciate it.